Okay, well, hi everyone. We are still happily ensconced in this lovely hotel in Oxford, and we're going to try and stay awake. Because if you thought data was tricky, Claire has persuaded me that we're going to spend this coffee break talking about working capital management.
Yes.
And I can almost feel the blood drain from me as I do it. But the good news is you know lots about it, and I'm going to nod and pretend that I do.
Yeah, I think it's definitely an area where, from my experience, that finance and procurement don't work closely enough across organisations, and it tends to be an activity there. Finance kind of obviously we have to manage working capital because if we have loans, or intercompany loans, whatever the funding is, we have to manage it in line with the funding parameters we have. But obviously, from a procurement point of view, you have a lot of influence on being able to help us achieve that. So,
which comes as a surprise. I mean, we were talking about this before we sort of got our coffee, and it actually comes as a huge shock that procurement does. I mean, I kind of know it can help, but I probably don't pay as much attention as I should. All right, let's just rewind.
Sure.
And sort of, get it. So for the interested viewer, what is working capital, and why does it actually matter?
Yeah. So working capital is the amount of cash and near cash you have on your balance sheet that's basically tied up in invoices to your customer. So the amount of debt your customers owe you. The amount of inventory you have on your balance sheet. So, you bought a lot of stock, it's parked on the balance sheet. It's a near cash asset, but it's not cash. And then how much credit you're able to get from your suppliers.
Okay. So
typically a finance team will monitor something called DSO, which is days sales outstanding. So it means once you've issued your invoice to your customer, how long does it take for them to pay you? They'll also look at debtor days as well, so an aging of your accounts receivable. And they do the same for accounts payable, and you do the similar analysis for inventory as well. So how old is your inventory? How long has it just been parked in some warehouse gathering dust? So that is basically what working capital management is about. Like, how much cash have we got tied up in things that are near cash but not actually cash?
Okay, so forget the silly question from procurement. Okay, so what? It's a measure of what's tied up. But what happens if we've got too much? If working capital tied up is reduced because we've got it tied up.
Yes.
Why is that a bad thing?
Well, obviously, all firms have some level of funding from somewhere. So it could be investment from a parent company, it could be a bank loan, it could be an intercompany loan. However you're funding your business, you have to manage it within constraints. And if you've got too much of this cash tied up in these near cash type of assets on your balance sheet, then it could be that you simply run out of funding. This is particularly problematic if you're a smaller company or just a very fast growing company. So as your sales and revenue figures take off, then suddenly you're billing more customers, so you've got more debtors, you're buying more inventory potentially. So you've got so then that often leads to something that's called overtrading. So this overtrading is this terminology that basically means that I'm doing great from a business perspective in selling more to customers, but actually I don't have the working capital to fund
to be able to do it.
Yeah.
Okay. All right. So it's important.
Yes.
So, key question. Let's just assume everyone now is saying they're looking, whoo, so what practical things can you do to improve working capital?
So the first one, and I think one of the most important ones, is look at your accounts receivable process. So this is about how you're billing your customer. So again, in lots of particularly the smaller businesses that might not be quite mature in their processes, I see that companies bill their customer, but they may not have received a purchase order from their customer, so they're kind of billing prematurely, or may have even delivered the services or goods before a PO, which is obviously really a no. Really, before you deliver
we're going to talk about this.
Any services or goods, you should have a purchase order, particularly if your customer operates a no PO, no pay policy. So, but that's assuming they have a PO. It could be that there's not some other mandatory information that the business needs on the invoice. They've sent it, and then sort of 30 days, if it's 30-day payment terms that you've agreed with your customer has elapsed, and you haven't got the money in the bank, and then you phone them up and go, what's occurring, and they're like, oh, we can't match this invoice or whatever to our purchase order, whatever the issue is. So in looking at accounts receivable, I think it's important to understand, what's your customer's process in terms of paying us promptly? What do they need to pay us promptly? Do they need a PO? Do they need any other information? Do they need some sort of booking form or whatever it is? Do they need some sort of proof of delivery? Whatever it is, you need to understand, what does your customer need to tick in order to be able to pay you?
So just effective, clean process. All right. So what else can we do?
So then when that process doesn't work well, when you're not ticking all the things that your customer needs to be able to pay you, I would suggest doing like a root cause analysis. So what is the cause of the failure? Is it human error? Is it that the business process isn't working? So keep doing root cause analysis, identify why you didn't get paid on time, and then look to fix the business process that's not working correctly. And the same can be said for example, inventory management. As I said, if you are a company that ties your cash up in stock, you need to look at sort of how much inventory you've got, what's the age of it, what's its turnover rate. It's no good if procurement are negotiating great terms to buy some stock if it means it sits there for 18 months unused. So great low cost stock is great, but if it's just sitting on the balance sheet gathering dust, it's not good for the business.
Right. So look, in that sort of two big areas in to improve, whether it's your sort of process from getting in your accounts billable and looking at how your inventory, there's a lot of language in there which as a procurement person I recognise, but I'll be really honest with you, most firms there's a separation between procurement and supply chain. So we'll set up the contract, but we don't manage what comes in. And we will focus on payment terms to a supplier. We won't necessarily ask ourselves the question, well, how does that back off against payment terms from customers? So I suppose from your perspective, what could procurement teams do to help finance improve working capital performance in their business?
So when finance put together an annual operating plan that is ultimately approved by the CFO and the CEO and perhaps some sort of board, we'll put together a set of assumptions. Now, I think it's quite important when you do that. Obviously, you'll have some top-down assumptions given to you. This is what we're looking to achieve. But you also have to do like a bottom-up exercise to say, can we meet that? And I think finance and procurement can work together quite closely then in saying, okay, well, who are our key customers? Who are our key suppliers? And what payment terms are we assuming, and we're building this budget on? Because if we assume certain payment terms, for example, or certain prices are negotiated and they don't transpire, so procurement do something else, then the budget won't quite tie up. So I think if we put together a set of assumptions and agree that set of assumptions, and that procurement will target achieving that set of assumptions to achieve the overall budget, then that's, I think, where procurement and finance can be on one page.
And on that, we're back to the same old message. It's come up in nearly every time we've communication and talking to your finance business partner.
Okay.
Anything else?
And it's not just one way. It's not obviously procurement talking to finance. Obviously, finance should be reaching out to procurement as
we'd
well.
like to think so. We'd like to think so. But yeah, actually, you're right. We should, because often businesses have a commercial function, and that commercial function is not just finance or procurement. It's legal as well.
Yeah.
And we come up with contracts or agreements, but actually, to your point, do we actually know how that fits in with your AOP?
Yeah, because as I say, if we'd agreed the same assumptions and we say, okay, well, we think, based on what we've already negotiated, we can hit these assumptions, but these contracts are up for negotiation in the next 6 months. These are key contracts. And, let's say we targeted to improve the terms and conditions, then obviously, as the year progressed, more communication. Is it likely that we're going to deviate from plan? Is it likely? And that could be beneficial, or it could be negative. And then from a finance point of view, what you're always doing when you're considering a plan is you're always considering what I call your unders and overs. So let's say you told me that it's not looking good. I don't think, let's say, due to whatever factors, we're going to be able to negotiate better terms than we already have. And I think, okay, but in the budget, we agreed we'd assumed better terms could be. So then I'll be thinking, okay, well, what else have I got out there in the ether, or tucked up my sleeve, or spoken to other people about that I can offset that, so I can still maintain the budget that we presented to, because for every item where you're under or not achieving your target, if you look for something that some other goal that can help you achieve it, you can offset that and still meet your overall budget. But if you don't know, if you don't speak to procurement, procurement doesn't tell you, actually, we're not going to achieve that, and it comes as a surprise, then you won't have already sort of necessarily found something that could offset that issue.
Well, look, great advice. And, if I now speak on behalf of procurement, if I'm being honest, we don't always have great communication or great relationships with our finance business. But I think what you said earlier is, look, go and have that conversation. And in your checklist of all the things that you're trying to achieve, and we talked about business cases in an earlier coffee morning, ask yourself whether you understand the way that your plan, your negotiation, your contract is going to relate to that annual operating plan that finance are creating. Because you know what? We talked about what gets a business case over the line. If you can demonstrate the part that procurement is playing to improve delivery of an AOP, but specifically, as we're talking about today, an improvement in working capital, that's going to get a gold star all round, isn't it?
And I say, in every annual operating plan you present, when you present it to, a CEO or a board, you always state, it's normally in a sort of presentation pack, but you normally have one slide, whatever, that states what all the key assumptions are. So what a good sort of controller should be doing, should be sort of going around all departments and going, okay, well, you're a key inputter to these key assumptions. Can you please agree to these key assumptions?
And
can we work together?
That's never happened to me.
Oh, really?
That's never happened to me.
No.
So there you go. I'm on a coffee, and I've just discovered something. Either I didn't read the email, which is always possible. All right. Okay. Look, great coffee as always, and a great chat about working capital. And look, share your thoughts. How are you tackling it? Because it would be great to hear. And look, we're going to set up some future webinars. As we said, we're going to be talking about accounting data model. We mentioned that before.
Yeah.
We're going to be talking that no PO, no pay. Funny that you mentioned it. We're also going to circle back to the conversation we had about ESG to look at this triple bottom line, whether it does actually exist. And it'd be great to hear. And then we're going to have 2 great sessions about why procurement loves finance and why finance should love procurement. And we're going to split that largely to find out what we can do to change our behaviour to make sure we do have those that great working relationship.
Yeah, I think it comes down to communication ultimately.
I think this is going to be the most used word.
Yes.
Anyway, look, hope you've enjoyed our coffee break. We certainly have, and see you next time. Bye-bye.
Bye. Bye.